Hello, hello. Welcome, everyone, to the Identify Fintech-Bank Relationship webinar. We're so glad you're here. We are going to go ahead and get started in just a few minutes. My name is Rochelle. I'm the head of marketing here at Identify, so I'm so excited to welcome you. Hopefully you won't see me very long, though. I'm going to kick it off to our incredible panelists to get a great conversation going. But while you're here, if you want to drop in the chat where you're coming in from, um, wherever you're coming in, and say hi from. And then,
Hello.
all right, awesome. Welcome, panelists.
Good morning.
Oh,
Yes, how's everyone? It's like I haven't seen you guys in years.
I know.
oh, bring on my video
There
here.
we go.
There we go.
Howdy, howdy.
Hello, hello. Welcome, to all of the early attendees. My goodness.
I don't know, look at this. Well, we got 21 so far. No, that's counting us. 17.
Okay.
Very cool.
17 of the most innovative minds
That's
in
right.
financial
There we go.
services joining us early.
And say if you're not on this webinar today, then what are you really doing? What are you really doing?
Ryan, we have that question for you from afar if you watched this webinar later. Ryan, one of our panelists. And Rochelle, I will just let you direct me when you want to kick
I was
things
about to
off.
say, you know what, Stacey, take it away. Get us started.
All
Let's
right.
jump in.
Welcome, welcome, welcome to the most innovative minds in the financial services space, joining this brain trust that we will have an opportunity to meet today. My name is Stacey Bishop. We'll go through introductions in just a moment, but if we might, let me set the stage a little bit about why we're here and what you can expect from this conversation. So, ladies and gentlemen, I'm not sure about anyone else, but I have been on a bit of a fall event circuit lately. I'm actually at my last event for the season today, and it is both inspiring and exhausting to see all of the different ways that banks can now partner with fintechs and all of the different fashions that are available to us in this space. And it is exciting. The exhausting part, I think, comes from the sheer volume of choices. Both banks have quite a few choices in who they wish to partner with, both in a vendor relationship, as well as we'll hear from one of our panelists here, Kayla, from a bank sponsor or an embedded finance relationship. But I think it's also just very inspiring because of the amount of quality fintech solutions that we're seeing out in the space right now. So this conversation is ripe for the environment that we've been able to see. Don't worry one bit if you have not been able to attend these fintech events. That is what we are here for. We have been on that world tour and we want to bring together some of these expert minds that you see here sharing the screen with me. I'm going to remove myself from that category, these expert minds, to share with you what we have seen from the recent event circuit, but more importantly, how we're seeing banks like Focus Bank, represented by Kayla, fintechs being represented out here by Jasper and FS Vector, and how we bring these two worlds together with the all important data architecture component represented by the one and only Mr. Lee Easton. So why don't we go ahead and begin there? And let's begin, ladies first, gentlemen. Kayla, please introduce yourself to these esteemed visitors joining us today.
Absolutely. Thank you, Stacey. I'm excited to be here. I'm Kayla Jones. I'm the Chief Fintech Banking Officer for Focus Bank. I was brought on in 2022 to stand up the fintech division. Focus Bank, though, has been around for a long time, since the early 1930s, family-owned community organization since that time, and we still are today. In about 2015 to 2016, we actually entered the cannabis banking space. And so when I came on in 2022, one of the things that was encouraging for me, knowing how complex fintech sponsorships was, is that the bank and the leadership teams, especially in compliance and BSA, were already familiar with complex oversight, what it looked like to monitor for that type of risk, what it meant to partner with organizations that weren't necessarily operating like a bank to be able to stand up strong oversight. That was also encouraging because it meant the board of directors and the rest of the executive leadership team were already prepared for some of those difficult conversations that you have to work through when you're standing up a new division like this. And so since that time, we spent a lot of time building out what does this oversight look like? What are the hard conversations we need to be prepared for? And what does our internal oversight look like for the department, as well as what does the department do with our fintech partners? And what does that oversight look like from a bank perspective to make sure we're managing risk and building strong compliant programs? So we have launched Ryan, who unfortunately couldn't be here, was our first partner. And so we've been excited to work with them and their team, and we've both learned some really great lessons along the way as part of that initial engagement. So excited to see where the conversation takes us today.
Kayla, do I have questions for you just based on this intro? I'll save them until we hear from the gentleman. And Ryan, if you are watching this, we are going to put some words in your mouth based upon what we heard from your conversation and our prep calls that we had with you in Focus Bank. So before we go there, I'm next going to go to Jasper. Jasper, please, kind sir, introduce yourself and tell us a little bit about FS Vector.
Well, thank you very much, Stacy, and thank you, Kayla. I'm a managing principal at FS Vector, which is a consulting firm. We work a lot with both sides of the bank and fintech partnership. So we'll see if I'm a fair representative here for the voice of the fintech in this relationship. I've been personally involved in the bank and fintech partnership space for a little over 5 years now. FS Vector's been around, I think maybe 7, so we're quite a bit younger than Focus Bank, probably similar ages to identify. We'll have to check who who came first. But we have found that especially from the fintech side, there are just so many pieces of this process that are so difficult to navigate from just the sort of ideation phase of, what are the partners that we need to launch a product from a BIN sponsorship or a bank relationship for another type of product offering, and then down through the vendor stack and all of the elements of a compliance program and other elements of just pieces that a fintech founder, they're thinking about their product, they're thinking about their customers, they're thinking about the market that they're entering, but aren't necessarily practiced in the world of regulated financial services. So helping them navigate that process from finding a partner bank to getting through partner bank onboarding due diligence to standing up and to launching a fintech product, and then getting from that kind of step 1 to step 2, step 2 to step 3, building the product and building the associated program to support it. As the customer base grows, as you want to start adding new product features, things like that. So, we've seen over the last 5 years the environment has changed so much, just having to do with the banks who are coming into the space, the banks who are coming out of the space, all of the various waves of FDIC and OCC enforcement actions that we've seen over that time, and sort of how those have informed and ultimately resulted in, I think, a stronger bank and fintech partnership playbook, and a
Absolutely.
much better all around just level of shared expertise of what needs to happen in these partnerships, and how those things can get done. So
Yes.
it's been thrilling to kind of help a number of fintechs through that process.
I very much appreciate you telling everyone here that there is a path forward. I mean, these consent orders, while concerning for some, there is a path forward with a well-regulated program, lots of learning. So I'm not throwing any shade towards any bank that might have found themselves with a consent order. We've learned a lot as an industry. We've seen a great deal of scoping now and legislation, shared legislation around how to do this well going forward. So there is a path forward, as you heard Jasper say. And one of those paths forward, I think, ultimately is founded in transparency. And one thing that we cannot be any more transparent about is the data side of this equation when it comes to banks and fintechs. Listen, data is what data is. And I'm going to now turn things over to Mr. Data himself, Mr. Lee Easton. Please, kind sir, introduce yourself, and we'll go ahead and get deeper into this conversation.
Thank you, Stacy. Yes, very happy to be here. Lee Easton, president and founder of Identify. And shout out to Rochelle and our marketing team for pulling this awesome group together. And I see the list of attendees on here, so some exciting names, some friends and colleagues as well joining in today. But Identify was built on the mission of solving fragmented data. We started heavily in the BIN sponsor in the payment space for embedded finance, working with banks that were bringing in some unique partnerships. It was all very new to us, and a lot of the challenges was the complexity of the data. Since then, last couple of years, we've grown and just serving traditional community banks, mostly all sizes, I think ranging from maybe 2 or 300 million up to about 5 to 6 billion in assets. And really, our purpose today is still around solving fragmented data, but we have a mission, an even bigger one, just to help these banks get to the cloud and become more nimble. We know that there's silos even outside of fintech sponsorship, but there's silos within the traditional bank as well. But I had the pleasure of meeting Kayla, I think, early on in her journey at Focus. And we had a great early engagement, which what I would call is almost like a readiness. So we were able to support Focus Bank in really the early part of this and before they even had any programs in the pipe, I think. And that's I will say that's a very important note of just their admiration to success and getting prepped and ready before opening up, let's say, the fire hose. And then now that they have an exciting first couple of partners, we can turn that fire hose on and in terms of data, they're very prepared. So excited to be here, excited to talk more about these fun topics.
Me too. And I'm going to get into the timing of Kayla and Focus Bank's decision to interact with Identify in just one moment. I'd be remiss if I didn't just mention why in the world I'm here. My name is Stacy Bishop. I spend my time in this happy medium between fintechs and banks and helping you all just have great conversations and partner together. With that, I do want to go ahead and return to Miss Kayla here on the call. So Kayla, you have given us a great bit of insight into Focus Bank. One thing I'm interested to know, just for anyone else here on the call that could also be interested, how big is Focus? What asset size are you all right now?
Great question. We are just over 800 million in assets today.
Do you know what I love about this answer? It's twofold for me actually, and I didn't know the answer. You should never ask a question unless you know the answer, right? That's what I've been trained in my life. Yet this is what I did today. What I love about what you've just told to us is the simple fact that it indicates that there's no right size to get into banking as a service. Some FIs think you have to be a multi-billion-dollar institution in order to go down that path. I think Focus has shown that you're innovative in the programs, both from the banking as a service side, but also with the cannabis side. You're really going after some innovative and attractive areas. But secondarily, I think it also illustrates that there's no right size to get into a very good data type of environment. And I have pitched a lot of data solutions in my past life, you all, working for core companies and other fintechs. And there is this sense I find sometimes amongst bankers, we've almost sort of been trained to think, oh no, that's not for us. That's not until we get to this size. And that is just not the case with data, because data unlocks so much about transparency within our worlds and where we're going, like how we're tracking and how we're going to get there. So thank you very much for that, Kayla, for sharing that. I guess I'd like to know a little bit more about how this conversation began with Identify. You started with Identify before you had your first program. Tell me more about that. Why did you seek out Lee Easton?
Sure.
Or did
So,
he seek you out? Let's
you
be
know,
clear.
I think we were introduced, and I can't
Yeah,
remember who it was that introduced us. I've learned since then, Lee also knows everyone in the fintech
everyone.
industry, I
He,
think.
he's the
Uh,
Kevin Bacon of fintech.
Oh my
He
yes.
is the Kevin Bacon of fintech for sure.
God, have not heard that one.
I love it. I'm gonna adopt that. So, but very early on, one of the things we knew was going to be important is that our examiners expect us to be able to very clearly identify KPIs, KRIs, how we're monitoring, um, these fintech relationships and how they impact the bank. And so being able to sit down and I work those things out with our leadership team early on and then go, okay, but how do we accomplish that? What does it actually look like? I think we all know that the days of doing everything in an Excel spreadsheet are not what they used to be. And that's not the best way to accomplish that, especially when you're dealing with the volumes of data that our fintech partners have at their disposal. And so we started talking to Lee early on, and I think we initially actually started talking about the potential to migrate to like a data lake type of
Yeah.
solution on the core side of the bank. And then we started exploring this ability to kind of pull that out or translate it into the fintech side and be able to make this a really efficient, streamlined process for data to not
Mm,
only pass back and forth from our fintech partners to us, but also for us to be able to standardize that data and to be able to analyze it in a way that we can actually use it and it be beneficial to both our bank leadership teams as well as potentially our fintech partners in the way that we look at that data and interpret it.
Okay, now I do want to bring Lee into this conversation for just a moment, Kayla. So Lee, it seems like there was an instance in which Identify was being considered for the traditional bank side, pivot to the fintech side, but Identify itself does work across both areas within a bank, both the
Yes.
traditional and the BaaS. Perfect. It's
Yeah, and
good to
I
know.
met Kayla first, but I think I ran into Jay
Mhm.
at Acquire Be Acquired, and
Okay.
he's their COO, by the way. And we were talking about all the other challenges he has on the operations side of the bank. So there's a multifaceted win with a data lake for especially for a bank that's doing some form of embedded finance or fintech partnership.
Yeah, for certain. Kayla, now that you had then this relationship with Lee and with Identify, and you decided we're going to be excellent at being a bank sponsor and we're setting ourselves up for success from the beginning. Did you choose to focus on a particular market segment for your fintechs?
We did. So
Okay.
we
Tell
initially
me
went,
about that.
it's really tempting to support everything
For
everywhere all at
sure.
once. But
Especially
then
in the
you
beginning. Especially in the
absolutely.
beginning. Yeah.
Yeah, when you're first looking for those partners, you're like, honestly, like, let's just see who comes to us first.
Let's see what sticks.
Yes, but we, luckily have an excellent leadership team who all sat down and were able to go, okay, we need to focus this in. We want to be really good at one thing first. And then once we know we're doing that, we're excelling in it, then we can look at expanding into other areas. So to start, we started with consumer credit. I was most familiar with consumer credit. Our leadership team was most familiar with consumer credit. We have, obviously a core lending department as well. And so our compliance teams were familiar with the regulations and parameters of consumer credit. And so that seemed like the best foray into the fintech space. And so that's where we're focused still. And then, of course, we still listen to conversations from our prospects and from partners like Lee and Jasper, what they're seeing in the space to kind of look to the future for, is there another direction that we might need to expand into? But for the foreseeable future, we are a consumer credit focused.
Very nice. Jasper, I want to invite you into this conversation for a moment because when I think of a fintech, these fintech founders are excellent. They're excellent and intelligent. They've created something amazing with their technology. They've built in audit capabilities. They have this repository of data that a lot of us would like to get our hands on about these end users, these consumers. And I guess I find myself wondering, this data, while it could be helpful, could likely also be overwhelming if they're consistently being asked for data that maybe they don't know what a banker like Kayla is asking for, or they think they know and they're sending the wrong data, and they're focused on data versus improving the product or improving the customer experience. So I guess with that kind of context, have you ran into scenarios in your past, if I can put you on the spot, in which you have fintech founders going, "Oh my gosh, I wish my sponsor bank would just tell me what they need or show me what they need and make it easy on us this one time. Ask for the right data first."
Yeah, Stacey,
That's
it's
a
really
big, tall order.
it's a big question. It's a very interesting
Yeah.
question. I mean, I think it's a microcosm of one of the things that we often identify as sort of one of the I guess I'd say one of the sources of risk, one of the kind of elements that needs to be overcome and leaned into in a bank and fintech partnership. There's a difference. I think of it usually as sort of a difference of culture, but I think it's also kind of a difference
Yeah.
of leisure domain, right? Like the fintech founders, like you said, they have built something incredible. They know their market, they know their customers, they know their data, but they don't necessarily know banking and they don't necessarily know what the bank's concerns are and what the bank needs. So there is always a little bit of this, this push and pull. We have so much data, we can give you anything, just tell us what you need. But there's, that can lead to sort of what Kayla was referring to earlier. We can send you whatever extract, we'll send you the CSV, we'll send you the Excel spreadsheet. Um, but in the end, we need to make sure that we're aligned on what actual data elements are important to get to the end result that the bank needs. That's going to allow the bank to continue partnering with and continue serving the fintech within the bounds of the bank's own risk appetite, within the KPIs and KRIs that the bank needs to collect and report and manage against. So it can be a really overwhelming. It's one of these things that starts out sounding so easy, but then you start building a manual process here, a manual process there, and before you know it, every month, somebody who works at the fintech is spending half of their time just sort of
Right.
cobbling together requests. And if the bank also is, if there's a little bit of change from month to month, and they're still sort of developing, what are the pieces of information that we need? How do we ingest it? That can create a lot of friction. It can create a lot of time spent, but also, it can be a source of frustration in these relationships if the fintech founder feels like, well, I don't know what it is that we need to get to the bank, or I feel like it's
What
changing.
more what more do you want from me, people? I will give you what you need. Just tell me what you need. While
I'll
Jasper,
add on that.
please.
It's interesting to see, early stage fintechs and then banks that are getting into this. They definitely kind of have an advantage to work together
Mhm.
and develop the standards. Because Kayla was saying they were thinking about standardization before they even had a partner. That's huge. I would say the challenge in the industry today, coming out of kind of the craziness of 23 and 24 with consent orders, is there was a lot of movement of pretty established fintechs, and that's where you're not gonna, as a bank maybe taking one of those on, you're going to be a bit beholden to whatever they were previously doing. And if you haven't established, your playbook or your standards for a file spec or ingesting or receiving the types of data that your bank needs, because they may think that you're just like the previous bank they were working with. Sometimes that's not the case.
Yeah. I'm going to dig into this a little bit more with you as well, Lee, but I first want to make note of the fact that we want to thank you guys for completing the poll out there. It looks like we have a variety of sponsor banks. Those of you considering being a sponsor bank, just kind of learning about this environment and what you need to know, you are in the right place, regardless of which category you fall into. And I am loving the comments that we're seeing in the chat. Love, love, John, your comment that everyone that Lee doesn't know. you're a good guy to know as well then, John, between you and Lee, which I think we have identified Lee as the mustached Kevin Bacon, Mr. Mustachio himself. It sounds like you two can rule the world, and I'm glad to know you, John. I hope we connect. But moving on a little bit more into this kind of conversation before we shift gears even further into the fintech side. Well, I am curious. We have talked about the fact that you were early on in focus and your bank sponsorship journey, discovering and deciding that you wanted to be excellent at data. You wanted to have an excellent data strategy. How was it in the beginning working with your first fintech, Thrive Financial, on the consumer credit, the consumer lending side, finding the sweet spot for the data consumption? I know like Jasper and I were talking about, hey, we can ask for anything, they can give the bank anything. My question is, did you ask for everything up front? How did you how did you Goldilocks that? How did you find the right data size?
Oh, absolutely. I think we, early on, we were like, well, if you've got it, we want it. It's really
Give it
easy.
to us.
Yes, it's really easy to feel like more is more. And, when you start talking about data, what they're tracking, what they have access to, what it looks like, where they warehouse it, all of those things, it's really easy to go, well, just give us everything and we'll sort through, what we need and what we don't need. We can just, and then you start getting that and you're like, we don't need half of this, or
What are we going to do with
possibly even
this?
less than half of it, to really monitor what are the critical elements of the program that are going to tell us, are they risking the bank? Or,
Yeah.
are they at risk of mismanaging the program and not being successful? What really are the data points we need to be able to figure out whether or not they're running it responsibly, because it's easy to get overwhelmed and it's easy to have far more data than what you have.
So
Absolutely.
true. Human nature, you're right. More is
Yes.
more. We want it. Kayla, how did you figure out what you needed? What was the right amount? Did you lean on expertise from Lee and what he has seen, or did you all kind of fumble your way through it, or both? Either are fair.
Yeah, so I've actually had the pleasure of working with both Lee and his team and Jasper and his team at FS Vector. And we had a lot of conversations with both of those teams to go, okay, what is the data we need? What are you guys seeing? What are, even from a risk perspective, what are you seeing that maybe we're not considering? Because, Focus
Yeah.
Bank has a lending program. We have a core operation. We're in the cannabis space, but we still may be missing something on the fintech side. So, what are you guys seeing, leaning on people with the expertise in the fintech industry and the sponsor bank fintech space? And then just kind of building from there. It also took a lot of conversation and communication and trial and error with Thrive. And I know if Ryan had been able to join, he would agree that one of the things we learned early on was, how do we work through the disconnect in semantics? So a lot of
Yeah.
times the bank would say, hey, we need a report that tells us XYZ. Thrive would put that together, they would send it to us, and we would go, what is this? this is this is not what we were talking about. And so then,
Yeah.
to be able to sit down with Ryan, he and I had a lot of conversations where we were like, okay, let's just sit down and talk through, giving each other the benefit of the doubt, I think is really, really critical. Your partner
Yes.
wants to give you what you need. The bank wants to give you clear instructions on what they're asking for. And sometimes there's just a disconnect in how we're defining that communication. So the ability to sit down and talk through, okay, really, this is what the bank is looking for. This is what we need to be able to monitor using this report. What can you guys do? And then let's work together to find the sweet spot on being able to get us what we need. Was huge, because there was
Oh,
definitely
yeah.
a lot of trial and error there and miscommunication that we just had to work through. Just like any relationship, communication is key
Sure.
for sure.
Well,
I
let's
want
be
to add
clear. Go ahead, Lee.
I want to add that we started today not knowing that Jasper was going to get to join us from FS Vector, but we work with FS Vector. We work with other companies similar to FS Vector as well. But we always see it as, we're very fortunate if we get some folks like FS Vector in the mix, because I think we can lean on them pretty heavily to help be that translator in a way.
Sure. Yeah.
Because from our perspective, it's, tech terms wise, we are just trying to map data from like the way it's organized or cataloged in one system to a way that it needs to be organized or cataloged into Kayla's system. And without, maybe somebody that knows all the rules and regulation or some of the compliance side that the fintech has built, because they've worked with the fintech on that piece, it can be tough to map that.
I agree. I think each side there's inherent language used in each environment, in each realm. Let's be clear, you all, for those of us that grew up in banking, we don't exactly make it easy for outsiders or technology companies to come in and know what we mean. I do want to give credit to Kayla for you guys actually sitting down and having the discussion versus just sending an email where somebody can pick up a tone and you actually proactively want to get to the bottom of it. Great job there. Looks like we have another poll. Why don't we go ahead and take some time to answer that so we can get the box off of Lee's face? At least it's on my face here on my screen, Lee. So
You
let's talk
can
a
do
little
that.
bit about data strategy for those of you that are out there taking a look at this poll. If you want to get back to Lee's mustache, answer that question. And in the meantime, I do want to flip gears and talk, Jasper, specifically with you, kind sir, moving into more of the fintech view. Do you have a sense of why a particular fintech might, and this, I'm going to zoom this out a moment, kind sir, but why they might choose a specific sponsor bank? Is that a relationship component? Is there a trust component? Is there peace of mind of knowing that Focus has an excellent data strategy that can help the bank, that fintech? Do you have a sense behind that?
There are pieces of all of these, and I think it's really important to understand, not only what a fintech is looking for that first bank partnership, but what is the thing that's going to, help them have a productive relationship throughout that first contract term, and hopefully, re-up and have an ongoing relationship that continues to grow, where both sides of the partnership are able to, um, take have a valuable experience there. And I think it's something that we've seen a lot, especially in the past. It was kind of a truism that every established fintech hates their bank partner and is looking to move as soon as the contract is up. And I think as the industry and as the playbook has sort of matured, I don't think that's the case anymore, because there's a lot more understanding across the board about what's needed from both sides to make these partnerships work. So,
Yeah.
when I'm seeing, what is it that really matters to the fintech in this relationship beyond just sort of a financial arrangement, that allows them to reap the rewards of a growing partnership and allows the bank to reap the rewards as well. It's about, positive intent and mutual understanding and adequate tooling, that make it so that the kind of higher friction points can sort of be smoothed away. And when I say the higher friction points, I mean that these are the things where the bank is going to have a lot to say about something that the fintech is doing, or is going to be putting a lot of requirements on the fintech. So, one that comes up all the time is something like ad review. I mean, that's sort of probably more purely on the compliance side. It's something that you have to have a smooth process, and also a responsive bank and an understanding bank, to get through that process on an ongoing basis quickly and efficiently. But it also comes down to just, understanding how, all of the requests that the bank is making of a fintech that have to do, from the bank's point of view, with its management of, its risk appetite and its sort of internal established risk standards. you know, is that something that, they're fostering an environment of understanding with the fintech, where they sort of understand like why all of these requests are coming in, where they're coming from, and that they're able to collaborate on ways to decrease the burden. So, I think a lot of this actually
Yeah.
does come back to data strategy and data connectivity, because a lot of the time, in addition to everything that's, changing hands between the fintech and the bank and the end customers on a daily basis, that's, it's transactions, it's new accounts being opened. There's also all of this sort of risk and compliance data that's coming back and forth and can create a huge it's hugely important to the bank to have eyes into all of these things and to have, for instance, like Kayla was talking about, we need the report that tells us this. Um, and we need the fintech to understand what it is that we're actually trying to get out of them. I think it turns out that a lot of that information is within the data that's changing hands on a daily and on a transactional basis. So, to the extent that that a partnership can leverage all of those data points to kind of make the bank and fintech team operate as closely to two pieces of a whole as possible. That makes a really successful partnership.
That makes great sense. I know, Lee, you had, I think, grossly uh, just simplified the work that you guys do at Identify, taking data from one system and normalizing it and so that it can be placed and made available in another system. I want to talk about that a little bit more in a moment, but while I have Jasper here live and hot, his mic hot, I guess I find myself wondering, with your ability and that of FS Vector to translate between what Kayla needs in order to be productive and manage her program, and from the fintech side, what they have and what they think Kayla's looking for. Have you found an easy way or process to help make that translation work so that Lee then can create a beautiful ecosystem where both Kayla and the fintechs are able to thrive?
Well, yeah,
Again, I'm
I,
asking you these big
it's
questions.
another big
We're
question.
gonna solve the world's problems next,
I
Jasper.
think I'll come back to the conversation that Lee and Kayla were having before, just about, when a bank is thinking through what it needs and why. First of all, I think one thing I'll say, I've been working in bank and fintech partnerships for 5 years, but I've been a consultant in the banking industry for 15 years. And it's an ever-present um, trope, I would say, is sort of the difficulty of managing a technology project within a bank. So in a data project, and it's very important, to the extent that you are going to be relying on external resources, to have partners like Lee and Identify who really understand the space that you're in and the specific risks that you're worried about and the things that you're trying to optimize. And I think, one of the places where people like FS Vector can come in and be really helpful in these partnerships is, you know, answering some of those questions like, well, what are actually the uses that we are going to need this data ultimately for? Like, yes, we know there are going to be, hundreds of data elements that are changing hands back and forth. At the end of the day, what is that? Is that because there are, 100 things that we need to monitor, or, what's the testing that we need to do? What's the reporting that we need to do? What needs to be making it into our board decks or our management committee decks? What are the KPIs and
Right.
KRIs that we're looking at and making decisions on, or looking at in our periodic testing that are going to actually have some impact on how we view the partnership, or how we step in this case or that case. And I think this is one of the things we've been, of course, reading all of the consent orders that have that have happened over the last 5, 6 years. We've been, involved in a lot of these partnerships and seeing what the pain points are for the banks, for the fintechs, seeing sort of what happens when a regulator comes in and what do they start asking the banks questions about. And I think frankly, at least prior to the summer of 2023, the publication of the interagency third-party risk management guidelines, I think there was a sense that a lot of the regulators' expectations for how these partnerships were supposed to work were basically just being transmitted through all of the public enforcement actions that were coming out into the world. So, sifting through those was basically how you'd sort of identify the pearls of wisdom of like, oh yes, we do really need to be doing this. The OCC is going to expect that, this piece of information is there. The FDIC is going to expect that this piece of information is there. And, years hence, we have, I think, really a tangible playbook for, yes, what are the outcomes that you need to achieve that need to go into how you think about this data strategy and, building this connectivity? What are it's not 100 things, maybe it's 15 or 20 things that you really need to worry about. reporting and monitoring on an ongoing basis.
Yeah, I think I hear you saying kind of create some North Star metrics for the organization for the health of the program that guide, knowing you can always get your hand on the other, 85 metrics because the data is there. Lee and his team do a beautiful job of getting data between the fintechs and the banks, but it's easy, I think, to be distracted and to lose sight of what you're really trying to manage when you go too big too soon. Lee, something that I had thought to ask you until likely just hearing some of Jasper's comments is how often a bank like Kayla's, there at Focus Bank, how often should they reevaluate their data strategy and what good looks like and which metrics to monitor? Is it when there's a new consent order? Is it quarterly? I mean, what's your read on that?
With uh with the pace of AI, it's almost like every week.
Okay,
It's
fair,
almost every. But well, one
fair.
thing on your previous question, Stacey, that
Yeah.
that I'd like to just give to the audience and we've worked with FS Vector on this specifically for a client of ours, but the workflow of getting data from the fintech to the bank to like a transaction monitoring tool, that is a helpful North Star sometimes if whether the bank has a like a newer AML or BSA type
Example tool.
vendor or if they're using something legacy, either one should be able to provide a file spec or some sort of specific requirements of data fields that that tool needs to activate. Oftentimes, they're going to want to go directly to the fintech and connect, right? And so the fintech pushes data directly into transaction monitoring, which is okay, but everything, and I'm hot off the press from the AFC summit, everything from the examiner's perspective says the bank still needs to be a primary system of record. So the bank still needs to be bringing all that data in. Ideally, we could help position a bank to be the hub, and then the bank has an API that then maybe goes to those transaction monitoring tools for the newer ones. The old ones are just going to want a file dumped into the system
Okay.
daily,
Okay.
multiple times a day. If we can get
Well,
that, that's
no,
huge.
go ahead.
No.
Okay, I'm not going to let you off the hook with my other question, but I do
Okay.
have this follow-up for all panelists, and that is what other type of data points do we need to be managing as sponsor banks? Do the folks here in the audience need to think about? There's a lot of different, what I refer to as layers and players that come into play in a bank sponsorship type of relationship. Lots of tech that we can make available. You mentioned transaction monitoring, TPRM, of course, the enablement providers, there reconciling tools that I could keep going on and on. Is it best to pull them all in and then monitor certain key metrics like those 15, Jasper? And if so, sounds like TM could be a good area to monitor. Kayla, what's something you watch each day? Jasper, what's something you would recommend they also watch?
Yeah, I have some thoughts on this. I don't know, Kayla, if
Yeah.
you want to go first with some of the experiences that the bank has had.
Go ahead, Jasper.
Yeah.
I'll follow up after.
Well, yeah, so I think Lee makes a really good point bringing up the transaction monitoring use case, and there is I think there are still it's still reasonable for partner banks in the space to operate under a number of different models when it comes to you know where exactly and how exactly transaction monitoring for AML is primarily taking place. And we see situations where essentially the bank is saying, like, we're going to ingest all of these transactions. We're going to be the ones doing the primary, alert review, owning the relationship with the transaction monitoring vendor. And in some cases, it may be the case that, it just makes more sense from kind of a product and risk fit scenario um, for the external party to be kind of in the driver's seat when it comes to monitoring. But either way, there has to be, I think it's sort of now settled law that the bank still needs to have line of sight into all of this that's happening. So that that plays into the AML transaction monitoring space. It also comes into reconciliation and record keeping. I think I'm surprised actually that we've gotten this far and have not mentioned the so-called synapse rule. And I think we've maybe been kind of focusing on the consumer credit side of the house. But a lot of these partnerships that include um, deposit accounts, it's of utmost importance that the bank has uninterrupted access to what the actual ledger balances of customer sub accounts are. Um, so those two huge things, AML, account level reconciliation. The one that I think that is often an afterthought for banks is realizing that this is also critical financial data for the banks. Just thinking about like,
Mhm.
okay, what's our exposure or what's our, if we're thinking about how these deposit balances change, if we're thinking about how these credit balances change, what's our open to buy, what's our exposure concentration of different deposit accounts, how do these funds move. That's all information that if you're just looking at the balance in an FBO account, or you're looking at just a daily or weekly transaction volume, you're not necessarily getting the information that you would need to develop and run some of these models, or do some of these um, kind of liquidity management or other sort of balance sheet risk related processes.
Yeah, it's very, very. Thank you. Kayla, I'm going to turn it over to you to provide some details about metrics you watch, and then I have a question from the Q&A from Mr. Dudley that I'll pose to you as well.
I was just going to say this whole conversation seems like it ties in
Yeah.
well here to Ryan's question that he posed. So,
Uh-huh.
I mean, we really break things out into categories. I think, it's probably no surprise to anybody monitoring the typical things that you would monitor on any lending portfolio, just to make sure risk is managed there. Things like, delinquency rates or average FICO bands. Are they staying within the parameters they've established or that we've approved within, the boundaries of the credit policy that we allow them to operate in? But beyond that, really looking into reconciliation. I know our CFO and his team do an excellent job of staying on top of reconciliation, and letting us know as soon as they see anything that looks like it's off so that we can identify where that discrepancy may come from or what did we miss. Communicating with our fintech partners about those receivables. And then on a regular basis, to Jasper's point, monitoring for that growth. And I think this is where a lot of fintechs don't necessarily recognize either, because they aren't traditionally bankers by trade, or maybe weren't in roles, if they do have a banking background, where that was a conversation they were having. But being able to monitor, especially when you get to the point that it's not just one or two partners, you've got these large programs that are potentially having a significant impact on the bank's liquidity and ability to do things. So, things like something that's come up in some of our conversations are things like unfunded commitments that banks have to monitor for, whether or not you have to count that if it's a credit card versus an installment product, how you're monitoring that. I know that's a conversation we had early on with Thrive because of the structure of their product. That is something that we had to factor in to some of our monitoring. So understanding the product that your fintech partner is offering, I think, is absolutely critical. Not just assuming that, oh, it's an installment product, so we know how that works and this is what we need to do for an installment product, and being able to be somewhat flexible in that to make sure you're actually capturing what you need to monitor for risk. And then I know Ryan also asked about some of the early signs we look for. I would say early signs on that kind of stuff, if they're being, and this is subjective, of course, based on your bank's risk profile, but any indication of an irresponsible approach. I mean, they're just way outgrowing, what they have the capacity to support. Obviously, we're monitoring their ability to purchase receivables, their ability to keep up with their reserve requirements, all of those things. If they're outgrowing or outpacing what they reasonably have the ability to maintain, those are all red flags for us. I would say the other thing that I monitor closely, especially early on, is how transparent and open are they with us when they hit a challenge. And even when they're not hitting a challenge, is the bank being given the opportunity to weigh in when they're considering something new or a shift in that strategy? Or are they coming to us and saying, hey, we've made all these decisions, we just need you to approve this, and this is how we want to do it? I think there's a
Okay.
critical difference in that conversation, and it allows for a lot of headaches and hurdles to be avoided if you have the fintech partner coming and going, hey, this is what we're considering. We think we want to go this direction, and this is how we want it, but we want some insight for you guys. What are we missing? And not that the bank is here to tell you how to run your business. To Jasper's point earlier, fintech founders are excellent at developing the product, knowing their market, but there may be things from the bank perspective that you haven't considered. And there may be things that the bank has to worry about because of
Sure.
our business and the way we're regulated that you don't necessarily have to worry about in yours, but we may have limitations that we need to have the opportunity to discuss. So
That is such a valid point. That's almost more of a qualitative type of measure, I think, with this
absolutely.
latter example. Do you monitor that in any way? Do you consume, do you produce a report, or does the fintech provide you with something that says, hey, we're thinking about a slight pivot or shift or moving into this area? Then do you track that within your system somewhere? Or is that more of a, we appreciate the heads up and now we know, like, it just builds trust more so and goodwill? I
A
hope
little
that
bit of
makes
both.
sense.
So we do
Okay,
monitor for that. We have regular conversations about, hey, things are going well.
great.
What's on the horizon? What are we looking
Okay,
toward? Is there anything that the bank needs to be aware of that you guys are looking to shift? And then monitoring that on a regular basis and documenting that we've had those conversations so that we can circle back if we know, Thrive is looking at XYZ initiative next year, that we circle back, sometime in early 2026 to say, hey, you guys were talking about this. Is that still on the docket? Is there anything we need to talk through? What's the status update on that? Is really critical. And then if there are issues that are run into, we're tracking and monitoring that as well as the resolution on those as well.
okay, fantastic. I'm trying to be mindful of time. We have about 10 minutes left. I don't see any outstanding chat questions or Q&A, so I may ask Lee a few questions, you all, if you don't mind. Lee, so by the way, you're sticking with reevaluate your data needs each week at the pace of change. Sticking with that one?
So we know that the environments that these banks are moving into, so Snowflake being the most common one we deliver, Databricks is coming up more and more. Those companies have, I mean, they're the ones that are driving the pulse of the market. They're the ones that are building with all the different models and AI. So it really is. I mean, we're seeing developments every 6 months, with these companies just releasing incredible new things. From a bank's perspective, it's really more about whether they're treating this as OpEx or CapEx. We'll see them reevaluating, cloud infrastructure as part of CapEx maybe every year based on what tax credits are available. So,
Okay.
mhm.
That makes sense. Well, Lee, I do want to ask you one more question, then I'm going to ask some closing questions and we'll begin with you. But before we get into the closing questions, I find myself thinking back to what you stated earlier, what I'd categorized in my mind as normalizing data between two disparate systems or various disparate systems. How do you approach that? And what options are available? You had mentioned API, you had mentioned some data file transmissions. Tell me, what can you get your hands on to help bankers and fintechs alike? And how do you go about normalizing that data, if you wouldn't care to tell us?
Yeah, we'll take whatever we can get. Typically, it's a
Okay.
file. Most of the traditional banking side is almost all file driven with the legacy tech, such as their core provider or some of the treasury management or loan origination products that they're using. That's what's exciting about when they are working with fintechs. Those companies have typically a cloud-based tech stack, and we can leverage APIs, but if the fintech is super successful and their volumes are in the multiple millions a day, then you really kind of exhausted the use case of an API. And APIs break a lot and they are costly to maintain, especially at a volume like that where you need almost as close to, I mean, you need perfection if you can get it. What we're excited for is for more companies to move to Snowflake or Databricks,
Okay.
because when both parties are on the same technology, we can unlock a shared server essentially in the cloud where we don't have to move data anymore. And that's kind of the future of these relationships.
Well, you've blown my mind because I hear API is the answer for everything. And now I've learned from the one and only Lee Easton and the Identify team that APIs do have limits, and the limits have impositions on data and the transparency then that can be created between sponsor banks and fintechs. Lee always teaches me something. Lee, because we are here applauding you and that mustache right now, I would like to give you the final,
Four times
the
now.
every chance I
I was
get.
keeping a tally here.
Yeah, as you should, sir, as you
Yeah.
should.
Yes.
But I'd love to know any closing thoughts you have or takeaways from what you heard from Kayla or Jasper today that have stuck with you.
Jasper, happy to have you on here. This was last minute, so I think most importantly, just your insights were very valuable. You get to see all of this happening, so you're kind of involved in every step of the way, typically. So you brought forth some good insights, specifically around like whether it's a lending program or a card program, what specific data points are relevant to those types of programs.
Perfect. Jasper, what about you?
Well, Lee, thank you for those kind words. It's been a pleasure to join everybody here, and I'm glad that I could hop on. I am also like Stacy. My mind is still spinning from your pronouncement of the the expiration of the applicability of APIs, because I think you're taking us to in pulling us into a future we hadn't even imagined. Um, but it's good to have those insights and to know where to steer folks who are grappling with these questions and these issues. The panel's been an absolute pleasure. So Stacy, thank you so much for hosting us and for all of the insightful questions. And Kayla, wonderful to share the stage with you.
Let's end with Miss Kayla. Thank you for that, Jasper. So, Miss Kayla, I'm sure everyone here on this conversation, if you haven't already connected with Kayla, please do. And that goes for the rest of our panelists as well, Lee and Jasper as well. But Kayla, you've been so generous with your knowledge and sharing how you approached data from the early onset of formulating your bank sponsorship. Is there anything that you would like to give to us as parting words for any aspiring sponsor banks, anyone out there in the trenches with you right now?
You know, I would say even if it's an established sponsor bank, whether you're, looking at entering the space or you're an established sponsor bank, the biggest thing I would say is be willing to adapt the strategy as you go. It's really easy to think we've got it figured out. We're going to be really rigid. This is our requirements. This is what we need to monitor this. To Lee's point earlier, things are changing so rapidly sometimes that you can fall behind really easily. And I think the other thing is to constantly be asking, are we actually using the information that we have at our disposal? And if we're not, do we need to change something internally to allow us to use it, or is it something we actually need to be collecting? And if not, can we lighten the load and become more efficient in that way? So I think just a constant reflection, willingness to self-reflect and make sure that, what we're doing is still working and not just that, well, we've always done it that way. And so it has to still work because we've always done an excellent job at what we do. It's really critical to continue to evolve with the industry and make sure that we're making the most of what we have at our disposal.
Love it. Words of wisdom from each of these panelists. We have just a few minutes left. Are there any questions from anyone in the audience? Please feel free to drop those in chat or on the Q&A section. They're all right now connecting with you guys on LinkedIn. I hope that's the case. I hope that's the case. This brain trust, they are so generous, as I mentioned, sharing their knowledge. So please do connect with them. I think one of my biggest takeaways, besides the fact that I have to completely rethink APIs as the end all be all solution. Thanks again to Lee for breaking my brain in that regard. But I loved hearing about the adaptability required in a relationship between a bank and a fintech. And let's be clear, folks, this is a relationship between people, not just companies. So you heard Kayla mention being adaptable as you're working with these fintechs. let's be honest, fintechs are lean and scrappy, and they're moving quickly, and they're building, and they want to be good partners. I think if we understand that as bankers, that is half the battle right there. And it's having a conversation with these people instead of always sending an email. I will step off my soapbox because I can apply that sentiment to absolutely everything within banking and fintech. Let's see,
I
we
want to
do have
add,
something. Oh, go ahead,
yeah,
Lee.
Andrew dropped a
I
note here in
was
our
just going to do
chat.
that.
So Andrew's asking, where do we see the biggest shift in regulatory requirements for bank and fintech partnerships? I'll take that one real quick, Andrew,
Yeah,
because
please.
we had Travis Hill and who else? We had a few folks at the AFC Summit recently. Um, um, that are leading the different regulating bodies. And I think the biggest thing is positive news as far as regulatory requirements might go. I believe that there's an education and awareness now from the examiner's perspective. So whether you're FDIC or OCC or Fed or whatever state, it seems like most of which are pretty aware now of what this is, and they might even know what specifics to look for. I think Phil Goldfeder has spent a lot of time trying to bring the challenges into education and then the education up to the people that actually do the exams. And that's important. And so from our perspective, you might actually make some traction now with your examiners, rather than them just maybe failing you because they just don't understand it. Whereas I think going forward, there's going to be a lot more clarity and understanding in what they're looking for. That's all I got.
Yeah, I love that. I might zoom out and even add that I've been paying attention quite a bit, Lee, to AI usage and AI compliance requirements. I don't know if you guys have seen this, Kayla, for your bank, but I know a lot of fintechs are paying attention if they're using AI within their tool. How do they track that, the compliance, that monitor the hallucinations, all of the aspects that we now, as modern individuals, modern bankers, modern fintech providers in this space, need to be cognizant of because of some regulations that we're seeing now introduced into the industry. I would also offer that as something that I've been hearing quite a bit the past couple of weeks and that I'm paying attention to. Jasper, Kayla, anything from your side? Biggest shift in regulatory requirements, bank fintech relationships?
Well, Stacy, you mentioned compliance for AI, and I think it's also important to look at AI for compliance. And some of the tools that have
Oh,
been really
mm,
have come really far over the last couple of years. And I think to Lee's point about some of the things that are being said by the leadership of the various regulatory bodies. Um, I think they're getting much more comfortable with the use of some of these tools and understanding how these can also result in better outcomes for this type of the sort of the oversight model that a bank has to exercise in the bank fintech partnership.
love that. Kayla, I'll give you the last word. I know we're a little past time now, but anything you might add?
I don't think so. I know, a couple years ago we were all looking at models and those using AI and machine learning, but now, you really have to expand your scope beyond that because it has so many more use cases in the fintech bank relationship. So it's definitely something to watch, but I do tend to agree with Lee. I think just in our conversations we've had with our own examiners, they definitely seem like they have a much deeper understanding of these relationships. And so that's always positive news when you can kind of partner with your examiners to make sure you're meeting expectations and know how to run it versus feeling like you're kind of fighting against someone who maybe just doesn't fully understand the dynamic of that
Yeah,
relationship.
for certain. And with that, I want to thank everyone out there for joining this panel discussion today, hosted by Identify. And you guys, this has been an amazing conversation. Each of your perspectives are both so unique, but also so needed in this space. So please feel free to reach out, as I've mentioned, to each and every one of these panelists. Thank you, Kayla, Jasper, Lee. Thank you and the Identify team for creating this forum for us to have this conversation.
Thanks so much, guys.
Thank you so much.
Thank you all.
Bye.